All right, welcome back for the episode of Carnivore Trades. Today is Sunday, October 2nd, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, just doing a quick Sunday night update video here. Gotta get it out of the way. Everybody's talking about Credit Suisse right now. I touched on it a little bit in the video over on Wall Street from Main Street this weekend, but essentially Friday afternoon, their CEO came out and was like, "Oh, our balance sheet's fine. There's no problems right now," and he really kind of said that unsolicitedly. So there was some questions being raised about their share price, and then they kind of got out in front of it and with some PR. And anytime you have a CEO unsolicitedly say there's no problems, there's problems. So it's pretty much just been boiling all weekend long. It's all anybody's talking about. You look at the share price here since 2009 of Credit Suisse, and then just compare that to the SPX. Since 2009, I mean this thing's been a dog with fleas in general, and particularly it's been particularly bad this year, obviously, as most things have gotten hit really hard, and then that huge gap down all week long. It's been pretty much a disaster here, and it's not just them. Deutsche Bank also running into trouble here. Look at that sell-off there on DB and Barclays as well. That's another one that's getting is under scrutiny now over the weekend here. The credit default swap spreads are under scrutiny. I think this eventually wants to get down to 550 here, but I'm doing this video here just to look at some levels, and I'm looking at the futures here overnight, and really not that bad. I was a little concerned here that we would gap down. We actually are getting a little bit of a hit right here as I'm doing this video, but we gapped down a little bit and then kind of went positive and rolled over. But it's not like it's a horror show just yet, and that kind of bodes the theory. If you caught the video on the weekend, a Friday video and the weekend video, but it bodes well for the theory that we're kind of a little short-term due for a technical bounce here. And if we look at the spiders, you can see obviously we closed through double bottom there, so that's that definitely has happened. We have to respect that. But if you look at where you're going into, you also have the 200-week moving average. You have a really major gap right there on the weekly time frame around 350, and then we're also into this previous all-time high here around that 360 handle there on the spider, right into that. So a little bit lower as well, the levels I'd be watching this week are 354. So that's going to be your 200-month moving average, which always coincides with the 200-week. So we're watching that 50-month moving average right there, and then we're also watching, if we flip back over to the weekly, that 350 level. So if we were to gap down and panic, that's where I would expect a major bounce to take place. I'm not really seeing evidence of that just yet in the futures, and you'd think that if we were gonna panic gap down on the Credit Suisse news, we would have already done it. Like we wouldn't have gapped down a couple points like we did and then rallied back green. We would have just gone straight down. At least that's generally the way I would have assumed things, the way I would assume things would go. Also, we didn't have a major volatility spike on Friday, even with that last 10-minute surge there. We look on the intraday here, that huge surge into the close. I mentioned this in the Friday video. Volatility finished red, so it's not as if there was big smart money like really coming in here and selling. It looked more to me like end of quarter OPEX related kind of, end of quarter OPEX moves, window undressing and window dressing, etc. It's very common end of quarter. So again, I still think we're going lower, but I think the market is due for a technical bounce here. Now, if we get one, the levels I'm watching on the upside here for the spiders, obviously you have to get back inside this channel here at 362.17. So that's going to be getting back above that previous low, the June lows. And then you have a little minor level at 365 and then 367 and change, 367.11 right there, that big hourly inside bar. Those are going to be your levels there, as well as that 50-hour moving average. So you notice going back to the 13th, that 50-hour moving average has acted as resistance twice now. So that is going to be a level to watch as well on the upside. But overall, given the nature of the news that's come out over the weekend and so far, the muted reaction from the futures, I have to give the market a little bit of an upside bias here going into the week. And I am still expecting some type of a pivot low to be put in this week, a technical bounce before the next leg. is before the next leg down, the next significant leg down. And I'm not talking about 340, excuse me, 350 on the SPY. I'm talking about 340 or possibly lower. So, anyways, just want to do a quick little update for you guys. I know everybody's been talking about it, so I wanted to get something out there on the issue here. But, anyways, guys, we'll know more tomorrow. Certainly by tomorrow's close. You guys take care. Have a great Sunday night. I'll talk to you all later.